Hello everyone and welcome to the lesson. In this lesson, we will learn what margin actually is and understand why it is really very helpful for us as day traders. As we know, the value of a futures contract can be very expensive, occasionally even more so. For example, the value of a Nasdaq futures contract, the NQ, is worth about $500,000. That's a very large amount of money, which is quite significant, and we really can't afford to keep such a large sum of money in a trading account for an extended period of time, and that's why we have the margin, as you can see. So what exactly is margin? Well, margin is essentially a certain amount of money that you are required to put with the broker so that you have the option to open and maintain a position in the market, to buy and sell a futures contract. The beauty of this is that the margin amount is very small compared to the futures contract. So now the question arises, if I want to buy or sell a futures contract on the trading day, how much money do I need to have in my account? I'm assuming that I don't have $500,000 in my account, so I'm just asking exactly how much money I actually need to have in my account in order to buy or to sell a single futures contract. To find the answer to this particular question, we need to go to the website of the broker from whom we buy and sell the futures contract. In our case, our brokerage provider is NinjaTrader. So let's go to their official website. As you can see, we're on the NinjaTrader website. I click here. Just scroll down a bit right now, and here I can see the entire table with detailed information about the commissions and margin. Let's click on this. As you can see, the PDF file opens up here on your screen, and if we take a closer look for the specific futures contract that we're interested in trading, which in this particular case is the NQ, you can scroll to the other side of the table and see that the margin is $1,000. which is the margin that gives us the ability to buy and sell for the trading day only. All we need in the account is just $1,000. If I want to have the option to buy or sell a single Nasdaq futures contract, I specifically need to have in my trading account the required amount of funds. In my account, $1,000. That's the whole story. And of course, if I sold the futures contract, yes, and I unfortunately lost money on that particular trade, I lost in total $1,000. Obviously, the broker will simply close the position for me automatically. That's the whole story. If we want to trade a different contract, we can simply take a look at the table provided of prices for all the contracts that the broker, NinjaTrader, offers us. You can see there are quite a few. Note that this margin requirement only applies specifically to the trading day itself. That means that if I want to keep holding my position at the end of the trading day and leave, it usually remains open until the next trading day, I'll probably actually need more than $1,000. But since we're day traders, we only need this amount in the account to start trading. I'm sure that some of you out there still think that trading a futures contract on the NQ index is actually extremely risky and very expensive, since every point here is worth $20 just in total. That means even a small move can sometimes cost us a loss of hundreds of dollars. For example, this last 15-minute move, which just occurred, is worth a total of 62 points. That means the monetary value of this particular move is the value of each point, which is $20 times 62 points. If we had just lost this trade, for example, we would have lost $1,240, which is quite a lot of money. So I'm sure you're asking yourselves if there's a cheaper option and a safer one for beginner traders, and my answer is yes, and I'll be revealing it to you in the next lesson, so we'll definitely meet again in the next lesson. Bye for now, and take care. Bye.